Okay, so now we're taking a look at exercise 17-6b. So here are the facts that are given in exercise 17-6b. We've got an investment in two stocks, Runner Corp, Shore Talk Corp. That we're given information on the cost and the fair market value of each. This is all given. The total cost of the two stocks that we own is $675,000. So we know, based upon those facts, somewhere in the company's general ledger there is an asset account called investment in stocks that has a balance of $675,000. Now, we're in the process of doing the fair value adjustment at the end of the accounting period under the assumption that the investment is either classified as available for sale or trading security. We're asked to handle it both ways. I'm going to go through the logic that would apply to both, and then we'll separately consider what changes available for sale versus trading security. So we know that we want to have a fair value adjustment account at December 31st, 2014, where the balance in that account, when combined with the balance in the investment in stock account, yields a combined or net balance equal to the fair market value of the overall investment portfolio. The facts of the problem here tell us that the overall balance or the overall fair market value of the investment portfolio is $660,000. So the question is, what is the desired balance in the fair value adjustment account? Well, the answer is we need a balance, a $15,000 credit balance in fair value adjustment account, so that when that $15,000 credit balance is combined with the $675,000 balance in the investment in stock account, the combined or net balance of those two equals the fair market value of the investment portfolio, which is $660,000. So it's obvious that we need to establish a credit balance in the fair value adjustment account by means of a credit entry. We of course have to have an offsetting debit of $15,000, and the question is, what account does that $15,000 debit go against? Well, the answer is that debit, everything that we've done so far, applies regardless of whether the securities are classified as available for sale or trading securities. Now, that $15,000 debit here differs depending upon whether the securities are classified as available for sale or classified as trading securities. If the securities are classified as available for sale, that account that we're going to debit for $15,000 is the unrealized holding gain or loss dash equity account. If the securities are classified as trading securities, that debit is going to go against unrealized holding gain or loss dash income account. Okay, so now let's take a look at how all that shakes out in terms of impact on the financial statements. So the financial statements, if these securities are given available for sale security classification, well, you know, first on the balance sheet, of course, we've got our assets, cash, accounts receivable, all the other assets with some balances in them, and then we come down to the investment in available for sale securities. The balance that we're going to report on the balance sheet of $660,000 is equal to the fair value of the portfolio, which is also equal to the balance in the investment account netted against the value in the fair value adjustment account, which of course after adjustment has a balance, a credit balance of $15,000. So that's how that $660,000 got there. It's the net of the investment account and the fair value adjustment account. Rest of our assets, total assets. On the liability and the equity side of the balance sheet, of course, we start out with our liabilities such as accounts payable, the sum amount, etc., etc. All the way down, we hit the equity section of the balance sheet, common stock, additional paid-in capital, retained earnings, and finally, this debit here to unrealized holding gain or loss dash equity appears on the balance sheet as a component of accumulated other comprehensive income. that $15,000 debit balance, which is occurred through this journal entry here, that $15,000 debit balance becomes part of accumulated other comprehensive income on the balance sheet. So total liabilities and equity, some dollar amount. There is no impact on the income statement from this end of year fair value adjustment if the securities are classified as available for sale. The gain, in this case loss, completely bypasses the income statement and lodges on the balance sheet as part of accumulated other comprehensive income. Now the result's going to be different, as we'll see in the next slide, if the securities are given trading security classification. Same basic layout: balance sheet, assets, the securities reported on the balance sheet is investment and trading securities instead of available for sale securities, and the balances at fair market value, just as they are in the case of available for sale. No impact, nothing to report down here, because that gain, that loss, that debit part of the entry here that we made went to an income statement account called unrealized holding gain or loss dash income. And that income statement account, representing the loss that we sustained because the decline in value of the trading securities, is reported over here on the income statement as a line item, $15,000 reduction in net income. So the net income of the company is going to be $15,000 less if the securities are classified as trading securities than if the securities were classified as available for sale.